right, team, let's get started. Give me 1 minute. All right, sorry for being tardy. It seems as if once I go live at 8:30, everybody that needed me throughout the day, it's almost like I give off this, what should we call it? Like a beacon, like everybody's knows. Well, nobody knows I do these live streams, thank God. But it seems like I get phone calls, I get emails, and it's just like everybody needs me all at once, which is good. So we're gonna bang out that work, no big deal. Everybody, January 5th, okay? Thursday, third trading day of the year, third trading day of the month. And as we know, markets were lower, okay? We've been talking about this over the past couple days and weeks here. We've been seeing this interesting rotation into emerging markets. Now, check out EEM, we talked about, which is a major ETF that tracks emerging markets. That has been catching a really big bid. VWO, which is the Vanguard Emerging Market ETF, has been catching a big bid as well. And I think that has been mainly due to this huge rotation into China names. Speaking of that, hold on. Let me see where the HSI is trading at today. I think China just opened, right? All right, so China's up about 27 points, and China has rallied from the October 31st low about 43%. So I'm expecting over the next couple weeks, you're probably gonna see this big move digest a little bit. I wouldn't be surprised if we see the Hang Seng Index come back down, back and fill a lot of those gaps, maybe come down to that 19,000 level. But this is a trend we need to be paying attention to. Notice the massive sell-off in a lot of the mega cap tech names. Amazon, Microsoft, I think was down today. Let's check how many points that was down. And these are the generals, right, of the market. Microsoft getting hammered, down 6 points or about 3%. Now, we talked about this, right? Usually, the junk gets sold first. The very high beta tech stocks, a lot of the unprofitable zero earnings, sort of SaaS companies really got hit. And then they come after the generals. Let's take a look at how Apple performed today. I know they were down 3%. Yesterday, they were down another percent today. So it looks like Wall Street's coming after the big guys now. So a couple interesting things we're going to cover today, because does anybody remember we were discussing that in order for, in my opinion, by the way, in order for the market to put in a major bottom, you got to have all of the Wall Street bets, the Reddit crowd, the GameStop, all the junk, right? All the nonsense, the gambling, they need to be blown out and they got to get washed out. So interesting news out of JP Morgan. Retail traders unloaded $3.1 billion in assets this week alone. It was the third worst week of selling ever. I know it's going to sound a little bit harsh, but that's actually what we need to see. Okay, during times where markets tend to bottom, retail throws in the towel just at the wrong time. Now, I'm not saying markets are going to bottom here. All I'm saying is that if I had to bet on it, let me just make sure I have my key card to get back in the office here. I've been forgetting everything today. Anyway, in order for the markets to, even think about bottoming here, I think one of the main things that needs to happen is retail needs to throw in the towel. And it seems as if that is becoming the case, at least slowly but surely. I see Susanna Q4, welcome. Good to see you, expert enough. Welcome, welcome. Let me just exit the office here. I think it's gonna be raining, hopefully not. Let's see who else we have in the chat. Hey, I see SME Media, welcome. ETC333, welcome. Thank you so much. Richard Vogel, good to see you. Austin City Limits, thank you for joining. Barbara Kemper says hello from Rhode Island, love that. Varity says, what are your thoughts on REITs, real estate investment trusts? I think that's a pretty broad question, but I think it's a good question. Now, there's many types of REITs. Let's just get in the elevator here. So hold that thought. I'll meet you guys on the ground floor. Kevin, what's up? All right, let's see if I can take off the Wi-Fi, my friends. Have a good night. All right, I think the buffering is done. So we're reporting live from Midtown East, East 31st Street and Madison Avenue. Now, I was walking through Koreatown today, and it looks like they're actually filming a movie. So I think I want to take a look and see what that's all about. But hopefully the rain will hold out on us. Ed T, what's up? Ken Glass, good to see you. Thanks for joining, everybody. Brick Stonewall, I see By the Book. Kevin is here. Dusty Cole, welcome. So there's a couple things I wanted to talk about, but I think I want to change up the subject last second. I was thinking about this because we've been doing a really, really good job of covering the fundamentals, right? And sort of following a systematic approach, a systematic framework to investing by looking at all of the necessary leading economic indicators, how to interpret them. We talked about the Institute for Supply Management's PMI number that came out yesterday. We did a deep dive there. We updated our Excel model. But I think I want to maybe switch up and shift up gears here and sort of talk about the other side of the market, not necessarily technical, but maybe from market psychology for a little bit. And I got this idea because I was walking to the office today from Penn Station, and I couldn't help but notice, and maybe this is just a cognitive bias that I have because I tend to be bearish on the markets right now, but I've been noticing, and I posted this on Twitter, I posted about 2 photos. I've been seeing a lot of cars, trucks, SUVs, whatever, vehicles with boots on them. And now I've seen that before, but it seems like it's almost an overwhelming amount. So I was walking down East 33rd Street today to get to the office, and I promise you, I saw 7 cars with boots on them. So I did a little bit of research. Oh, check this out. So we have a little bit of a storm moving through New York. You have the top of the Empire State Building in the clouds here. It looks beautiful. Love the view of the Empire. You could just barely see the top here. Hey, Clark Rumsey is here. What's up? Natalie is here. Says good evening, Tom and team. Good to see everybody. Let's head east actually today, and then we'll walk through Koreatown. But here's what I'm getting at. I want to know what you guys are seeing too, because it's very, very easy for you to feed into your own bias, right? But it seems as if either something's going on in the city where the city is really coming after people for not paying their parking tickets. So anyway, I did some research. If you have over $350 worth of unpaid parking tickets, your vehicle is subject to a boot or a tow. And I was looking, I mean, I don't drive, I don't own a car, but I was looking at on New York City's website what you have to do in order to get the boot off. And listen to how crazy this is, okay? So if you walk outside, unfortunately, and you have a boot on your vehicle, you have to call up, somebody has to come out, and it's a $130 boot fee, okay? It's an $80 sheriff execution fee. It's a $70 tow dispatch fee, and $77 in other miscellaneous fees. Oh, and you have to, make sure you pay up all of the different parking tickets. But I never knew that. Did anybody else know that you have to pay almost over $500 in fees just to get the boot off your car? And it seems like I'm seeing this a lot more nowadays. Anybody else seeing this in your cities? A lot more cars A lot more vehicles with boots on them. Will M says, remember when those guys, were cutting the locks off the boots? I do remember that. I don't know. I think I'm just seeing it a lot more now. A lot more. Wendy England says the fees are nuts. Dan Zhang says some of those parking signs in Manhattan can be so tricky to understand you have to read them multiple times. Yeah, it's nuts, man. It's really, really crazy. Dr. Longest says that's a ton of fees. The LT Prod says, so the city just lets it slide, but yeah, and you know, the LT Prod, you make a good point. And I'm gonna touch on that in a minute. Edward Adams says, I know you had to pay, but not any specific amounts. Yeah, I guess the thing that I'm most concerned about as it relates to the economy, right? And we're gonna tie this back to the financial markets here in a minute, but I really think, and does anybody remember, this is probably about 5 to 6 months ago, as we were talking about a specific statistic, such as the US savings rate. Now, there was a really good interview given by Stanley Druckenmiller, and he was talking about how, you know, the United States, consumers in the US have about $2 trillion in savings that they have to work through, and that was 6 months ago. And he even said on the interview that it's going to take about 6 to 8 months for consumers to work through that. So you'll probably really start to feel the pinch of inflation and the pinch of the recession 6 to 8 months from now. Well, fast forward 6 to 8 months, here we are. So I want to make sure I'm not suffering from cognitive bias. Are you guys seeing, or maybe in your personal life, are you feeling that? Are you feeling the pinch of inflation? Are you feeling the pinch of the economic downturn? Has anybody close to you lost their job? Hopefully not. Have you lost your job? Right? You know, we did a whole segment last night on Walks on Wall Street talking about Amazon announcing 18,000 layoffs. Right now, it's 1% of the company because they have, I think, 1 million employees, or something like that. Less than 1%. But we also had news from Vimeo coming out laying off about 11%. News from Salesforce laying off about 10% of their workforce. So are we just now seeing some of the vice scripts of the poor economy hit consumers now that we've had some time to work through the savings? Any thoughts on that? Shauno says no. Clark Rumsey says, Tom, my grocery bills are insane, but that's about it. If we look directly up here, you could still see the Christmas wreath on the beautiful Grand Central Terminal. YC says affirmative, everything is costing more. DA says, Tom, what do you mean cars with boots? So have you ever walked past, well, I guess maybe you haven't, and they have like the NYPD boot on? Well, we'll look for it tonight. And that is to prevent the person from driving the vehicle because they've had overdue parking tickets. DWG says, Tom, we are trimming the fat in our organization. E. Smith's just got the bill for my homeowner's insurance. It's up 35%. Holy crap. E. Smith, whereabouts do you live, if you don't mind me asking? Because I got my renewal for my homeowner's insurance and it actually went down, and I'm in Southern Florida, which is kind of crazy. Nicholas Sturr, I did see the nurse strike. I did. Joseph Hardaway, good to see you. Liz Hatch says my PGE is 601. Lizzie Hatch says everything is high. Dan Zhang says, Tom, I was at BJ's today. The price of eggs made me drop my jaw. Wow. Yeah, well, I mean, we've been looking at the CPI report, and to be fair, CPI is coming down, except in those critical categories. The categories that I would argue are the most important, right? Food and as well as shelter costs. Wow, YC says in LA they charge you triple just to get it back. Dusty Cole says egg prices and meat, but all in all, it's not too bad. Cody is here. Wendy England says over $200 if they tow it. And they also have a daily charge as well. You know, I did see that. I did see that. I think in New York City, it's a 5% interest. They tack on 5% for every day you don't pick it up. Which, it's honestly heartbreaking, because if you think about it, and this was going to be the sort of the segue into the topic that I was going to go into, it's that, you know, it's always the case that during hard economic times, you know, it's obvious that the government is trying to clamp down and suck every single last dime that it's owed, right? And during times of economic downturn, they really put extra weighting and extra credence on that. You know, I like to call them the revenue generators, the traffic cops. You know, any little thing they'll bang you for. So I think there's probably, now I can't confirm it, I don't know, I'm just speculating. There's probably a really big push in the NYPD right now, especially in the traffic division, to ticket and fine and boot every single vehicle that qualifies, so they can siphon the most amount of revenue out of people. But unfortunately, this really impacts lower and middle income communities the worst, because all of the data and the statistics show that, you know, if you were of lower income, right, and maybe you made a mistake, maybe you got a little parking ticket for $35 and you can't afford to pay it, and it adds up, and your car is your only transportation to work, and then the government puts a boot on it, well, you've just lost all of your ability to generate income. And, oh, guess what? The government is going to tax you 5% interest to get your car out. So I think it's almost just like an extra poverty tax in a way, but that's my opinion. Dusty Cole says 8 dozen for cage-free eggs. You know, I've been hearing a lot of people, especially in the chat, voice their concern about the cost of eggs. Haven't really noticed it, honestly. Maybe it's because I don't purchase eggs that much, but I've never really noticed it, to be honest. Hey, Will M says, Tom, up here in Albany, there are dozens per year that get towed during snow emergencies and never picked up because people can't afford the $500 plus to get out. Yeah, and so to Will M, that's a great comment, and thank you for sharing that. That's exactly what I'm trying to get at, because, you know, and it almost exacerbates that issue during dark economic times. Okay, we have record inflation, people are paying record amounts for rent, record amounts for food, you know, and a lot of times people do pay for the parking in the streets of New York, but maybe they're running 15 minutes late, maybe they're running 10 minutes late. But the NYPD, especially the traffic unit, will make sure they send somebody out to bang you over the head to make sure you rack up those tickets and destroy your life. And it really sucks, because this city, and not to sort of harp on this too much, we are going to tie it back into the financial aspect, I promise. But, you know, this city is going through a time of increased crime, right? I think sometimes it's overstated by the media, but I think it's undeniable. And it's not just, it's not exclusive to New York. It's all major cities. But what tends to happen is the government will go after the law-abiding citizens, because they know if they fine them and they nickel and dime them for fees, these are, you know, upstanding people, so they'll, you know, cave in and pay it. The criminals will not. So it's horrible to see it. Look, I don't drive, so I don't have any of these issues, but I see it for other people, and it's sort of upsetting in a way. Ratfink says, Tom, Washington State just raised the cost of gas by 50 cents per gallon, which hurts the working poor, the elderly, and the infirmed, not including the middle class. Did they really, Ratfink? How so? Let me see. Washington State raised the cost of gas by 50 cents. I'm assuming that is a gas tax. I was not aware of that. Dan Zhang says, I once got a ticket at 6:58 p.m. at a meter parking because it's only free after 7 p.m. Jeez. Yeah, I think things like that. I think, you know, the government needs to be showing a little bit of compassion here, because people are hurting, right? It may not seem like it, because, you know, we walk Midtown Manhattan and, you know, it's a very high rent district, but You know, I think the poor, unfortunately, and the middle class are going to be hurt the worst by this. Ed T, what's up? Oh, Smee Media says the bird flu is causing egg prices to rise. I believe it. I believe that. Hey, Alex is here. Says hello from Greece. Welcome, Alex. AM. Says 1 liter of gas is €1.60 or €1.60 in Spain these days. Well, you know, the good news is, you know, not to look at all the negative, but here's the good news, right? At least for us here in America. I think gasoline is going to stay down and stay quite depressed. Just look at crude oil. I firmly believe, and we've been talking about this for a while, I think crude oil topped in March of 2022. And I remember the day we were doing this live stream, crude oil hit like $130 a barrel. And it was so euphoric. You were reading every single Barron's article, every single Wall Street Journal article about how crude oil is going to $200 a barrel. And I'm like, okay, yeah, this is definitely the top of this. And now, I think crude futures, if you look at ticker symbol CL, I think is what, $77, $72? Maybe somebody could look that up. It's either 77, $75, something like that. Hey, Shauno says, Tom, you think so even with China opening up? Shauno, that's a good question. And yesterday we were talking a lot about China. And we were talking about China because a lot of Chinese ADRs are acting really, really well. And I think that a lot of money managers and the consensus on Wall Street is that China is quote unquote uninvestable. You can't invest money in there. Well, price doesn't lie. And the Hang Seng Index, which I think China just opened, 15 minutes ago? Is up almost 45% from the lows, back above the 200-day, back above the 50-day. I think we're going to back and fill here. But usually bull markets start on pessimism. Let's wait for the police officer to go by. So to Shauno's point, it's, okay, Chinese stocks are acting well. We're seeing this rotation out of U.S. equities into emerging markets in China. There's no denying that. However, if the bull thesis is that the rotation should go into Chinese stocks and Chinese companies because they trade at, what was that? Because they trade at reasonable valuations as opposed to U.S. companies. Well, and if China's opening up, like they say on the news, well, shouldn't that increase the demand for crude oil, thus increasing the price? And in theory, yeah. So I actually don't know. That is, I'm stumped on that as well. So I really don't know. We were trying to figure that out last night and talk about it. It's a good question. Here's the entrance to the Queens Midtown Tunnel. Very seldom do we come over here on the live stream. It's kind of nice to show you guys this. I see my friend Matthew M says, hey, Tom and team, what's up? Good to see you, Matthew M. We were just talking about boots on vehicles. Custom built American fire truck says, hey, Tom, I've been wanting to ask. So I've heard when the U.S. is in a recession, typically the beauty, etc. industries thrive after. What are your thoughts on China? What will thrive there? So I've turned bullish on China. And the beauty industry, are you talking about like the Ulta Beauties and the Elfs of the world? Because that is actually very true. And we've talked about that on the stream before. For whatever reason, and I don't know the reason, people, women and men now, right? Not just exclusive to women, tend to spend more money on simple luxuries, right? Relatively affordable luxuries during times of economic turmoil. And sales of beauty products and makeup actually go up. If I'm not mistaken, I think I programmed a link in the Nightbot about this. I think it was a Vanity Fair article about this exact situation. But I forget the Nightbot command. But you're right. I don't know what the reason about that is. And But you're correct. So take a look at Ulta Beauty. The stock is trading near a 52-week high. I think ELF, now again, I'm not telling you to buy these things, right? We're just talking about it. ELF is also trading near a 52-week high. And the earnings are stellar. Sunshine after rain. This is Ulta and ELFs of the world, yeah. Matthew Ems has got a lot of candles and perfumes. Not for me, but the other half. Very nice. Ed T says people might be chasing now with these Chinese stocks. You got to be careful. This is Ed T. Yeah, I mean, China is definitely very, very risky for obvious reasons. Number one, can you trust the financial reporting, and can you trust the earnings? And I don't know the answer to that. Do I think that a lot of the financial reporting coming out of China is fraudulent? I do. And we've been very outspoken about that on the channel. I think look at this building here. It looks to be a sky bridge bridging the two buildings. This is actually really unique. I don't think I've ever seen that building up close before. Stephen Lewis, what's up? Good to see you. But you're right. Can we trust the financial reporting coming out of Chinese companies? I don't think so. But at the end of the day, price doesn't lie. Now, this move in the Hang Seng Index has been just ridiculous. It's been almost just like a 12 o'clock move north, right? So we're probably going to have some back and filling here. But if the Hang Seng Index can consolidate and build a base above the 200-day moving average, it's game on for these stocks, in my view. Could I be wrong? Of course. But that's what it seems to be. Susanna Q4, thank you for joining us. Mars Tech says it's crazy that China has 1.5 billion people. Now, here's another, I would say, broad-based economy that I'm very bullish on long term. I'm very bullish on India. Very, very bullish on India. Now, if we want to keep it to simple terms, and I want to be very careful about super simplifying things, but let's just talk in a general sense. I know there's many, many nuances. I know there's many different catalysts. I think we're near the Children's Hospital here at NYU Langone Health Center. It's kind of cool to come over to the east side. But generally speaking, what really drives the broader stock market? Obviously, it is earnings and liquidity. But in order to have corporate earnings, there needs to be people to buy different products and services, right? So, in generally speaking, you need a healthy population that is growing, and you need a very, very robust middle class. And I think that's why a lot of venture capital firms and private equity firms, check this out. You have a pretty cool view here of the Chrysler building. Let me see if we could walk a little bit further over here so I can get you guys a better view. But it looks cool from the west side here. But anyway, I think that's why a lot of VCs over the last 7 to 10 years have been really, really trying to invest a lot of dollars in Africa too. Africa, I think, has the fastest growing population of people ages 18 to 25. And that is the main driver of an economy. Now, do they have the infrastructure to pull off a robust economy? I don't know, probably not, but I would be more bullish on India. Hey, Ratfink says, I'm in with India. Also love the Chrysler building, thank you so much. I see my friend Richard Vogel says, is that a dispensary? I don't think the marijuana dispensary is here. I think it may be down near St. Mark's Place. Maybe we'll actually have to check that out tomorrow. I'm actually curious about it too. Lisa says, do you think with so many sick in China, a decrease in supply chain could hurt the U.S. economy? Well, I think that one of the number one drivers of inflation over the past 2 years has been a disrupted supply chain, in my view. Now, I think there was mainly two things at play for all of that inflation, which then in turn disrupts the economy. And I want to know your thoughts, actually more so than mine. But I think first and foremost, you're going to get a ridiculous amount of inflation if you continuously expand the money supply. Okay, that is number one, basic economics 101. You know, just take your college 101 course. If you expand the money supply, it's inflationary. And if you look at the M2 money supply, you can look at this for free at the Fed's website, fred.org, I believe. We've ballooned our money supply, and we told everybody to stay home. So you were giving out money. You had the Trump bucks. So Donald Trump gave everybody free money. Governments put in place draconian lockdowns, so everybody had nothing to do all day with tons of money in their pocket to spend on goods and services that nobody was producing. So of course prices are going to go up, and of course inflation is going to take a rocket ride to the moon. And then when we had President Joe Biden become elected, and this isn't, I'm not being politically negative towards either party, I'm just stating the facts of what happened. We got more stimulus, more government stimulus. So we had stimulus from the Republican Party, we've had massive stimulus from the Democrat Party, and a period of about a year and a half where everybody stayed home with money in their pocket to buy goods that nobody was producing. So you had a shortage of goods and an excess of liquidity, and that drives price. And that drives price in a big way. And now that China is finally reopening, I think, as an optimist, things are going to get better and inflation is going to come down. I truly think that. But again, that's just my opinion. I want to know what you guys think. But guys, check out this gorgeous view of Long Island City. And I think this is the water taxi, right? New York City water taxi. I've never been on this before. RS, thank you so much. Says Tom, watch out for the bikes. Thank you, RS. Hey, Ryan Beck is here. Says evening all. Good to see you, Ryan. Hope you had a good day today. Hawaii is here. What's up? Matthew M says I invested my Trump bucks on firearms, gold, and silver. Dusty Cole, what's up? Ed T. Now, I don't know about you guys, but this almost feels like a Batman movie. Like, this honestly looks like Gotham City here. You have a little bit of overcast. You see the luminescent lights of the city bouncing off of the clouds. It's honestly an awesome view here. I believe that is the Williamsburg Bridge. You have the highway here on the east side of Manhattan. I know, Michael Joseph says, man, Queens is starting to fill out with a lot of residential. Now, I think it was Dan Zhang that told us this. I would assume it's one of these, right? Is the tallest residential apartment building in Queens. And I think Dan was saying that some of the units are more expensive than some of the units here on the island of Manhattan, if you can believe that. But here's the thing. If you live in Queens, right, especially Long Island City, you have an amazing view of the New York City skyline. So there's a trade-off there. I mean, you're not in Manhattan, right? So that's a negative, but you have the best views of Manhattan. Interesting. Hey, my friend War Walker's here. What's up? This looks like a movie backdrop from the 40s and 50s. And the wind is picking up too. Now, I do want to keep everybody aware of an interesting predicament or a trend that is finally actually starting to play out on Wall Street. Now, we've always talked about the fundamental side of the house, right? Focusing on the earnings, the sales growth, the return on equity, pre-tax, after-tax margins as it relates to finding a good investment. But at the end of the day, we are in a very, very harsh bear market. Let's see if we can walk all the way out here. Maybe we need a ticket for that, but we'll see. And I have a very strong opinion that in order for us to find any sort of a bottom or a short-term bottom in this stock market, a lot of the irrational, exuberant speculators need to be blown out of the market, right? And that may sound harsh, but that's just how the markets work. And from some of the data that we've been getting out from JP Morgan Chase today, it seems as if that trend may just be starting to play out. And I'll tell you what I mean by that. Really cool dog crossing the street here. The dog is better dressed for the weather than I am, by the way. Now, some news coming out of JP Morgan. They said that retail traders offloaded, which means that they sold, about $3.1 billion worth of assets or stocks this week alone. Okay, and that was the third largest week of selling ever in recorded history for retail. Now, that is very reminiscent of okay, what about now? Maybe this is a little bit better now that we're away from the... We're back? Awesome. So, usually that's the way the markets work, and it's not, I guess, fun talking about it. You never really want to see people losing money. But the markets tend to do that. They tend to wear you out, tire you out, and then after the market has worn you out and tired you out, the market tends to shake you out, which means forces you to sell just at the exact wrong time. And a lot of retail traders, and I've been watching this very closely, fund flows, okay, money flows into some very speculative ETFs, most notably the Cathie Wood ARK funds. As that ETF has been declining, and it has declined quite spectacularly, the average retail trader has actually bought all the way down, down I think 90% now. And just over the past couple weeks, they are finally starting to sell. Now, I'm not saying the market's going to turn around and start to go up tomorrow, but these are the signs that we need to be paying attention to. And if I had to bet, I would say, based upon time and price, the market could still go lower, but I think in terms of a time frame, I think we are probably halfway through or more than halfway through this bear market. What do you guys think of this building here? I think it is extremely unique. Dan Zhang says, Tom, if you go to Street Easy and take a look at the price of a one-bedroom apartment in Long Island City, you'll be in shock. I probably will, man. But then again, you probably have amazing views too. Hey, the Dark Horse is here. Thank you so much. Joe Driver, Sabrina Fair. Kevin Jones says Mercedes-Benz recalls 300,000 cars. That's not good. Yeah, Melanin says, Tom, you should go to Brooklyn one of these days. The views are spectacular. I definitely will. All right, let's try to get out of here. We're going to buffer a little bit again. Will M says, Tom, I've heard you mention Can Slim. Yeah, so I would just buy that book, right? Honestly, everything you need is in that book. Very good book, one of my favorites, How to Make Money in Stocks by William J. O'Neill, the founder of Investors Business Daily. Look at some of these apartments here. Massive windows. Those are probably, what would you estimate those windows or the ceiling heights? Probably 10 feet, maybe a little bit more. I can imagine the amazing views that you have there. But yeah, I would just really, really study that system. And one of the things that you'll notice as you're reading that book, even though it may seem at first very, very technical focused. It's all about the fundamentals. At the end of the day, right, and I think Peter Lynch said this the best, you know, if a stock is projected to make $5 a share this year, and they're going to make $10 a share next year, generally speaking, the stock is probably going to go higher over time, right? But if a company is earning $10 a share this year, and next year it's going to earn $5 a share, well, the stock is probably going to go down, because markets tend to be forward-looking by 6 months. And people don't buy a stock, or investors don't buy stocks for what the company earned yesterday. This is a really unique cafe spot, isn't it? It's called Hole in the Wall. This is actually really nice. Now, investors, very seldom they buy stocks, or they don't buy stocks because of what the company earned last year. They want to participate in future earnings of the company. So I think if you focus on quality, really, really good quality, which companies are going to generate the most free cash, which companies are going to generate the most earnings growth, and stay away from all of the penny stocks and all the nonsense, I think you're going to have better results. Hey, Stephen Bate, what's up? Good to see you. This is a really cool spot. I've never been here. Awesome views, and everything is a huge pane of glass. Has anybody in the chat ever been to this place? It's called Hole in the Wall. Looks kind of cool. Hey, the Mighty Bull is joining us. Good to see you, Mighty Bull. Mike Tiny says, link for the book, please. So One Up on Wall Street, there used to be a free audiobook online. Hey, we got the FDNY coming here. Hopefully everything's all right. But Peter Lynch was the former mutual fund manager at the Fidelity Magellan Fund. It was one of the most successful mutual funds of all time. And that's one of my favorite books about the financial markets. It's called One Up on Wall Street by Peter Lynch. I would highly, highly suggest you getting that book. And here's the awesome thing, right? There's so much free information out there, and very, very cheap information, that the only thing that you really need to do is just put in your time and effort, right? So I really think now that we live in 2023, I hope everything's all right. We got the FDNY coming in. Maybe it's just somebody stuck in an elevator, something like that. But generally speaking, if you want to learn any skill, you can see everybody's looking at what's going on too. You can see the people in the windows. I'm gonna have to do some research on this building and see how much the units are. It's American Copper East. But generally speaking, it's all about the amount of effort you want to put in, because you can go on Amazon.com, go to the used book section, and pretty much buy any finance book out there for like $2, quite literally, right? So money is really not an issue anymore for getting started. It's really not a barrier to entry if you read and study the right materials, right? From actual traders and investors who have managed billions and multi-millions of dollars successfully, like William J. O'Neill, Paul Tudor Jones, Stanley Druckenmiller, George Soros, Ray Dalio, the list goes on. I mean, they've published so much free information, or relatively free information, that really the only thing you need to do is just put in the time to study it, which is a blessing, by the way. It's a total blessing, because, think about back in the 70s, much of this information, you had to go somewhere to learn it, and it was expensive. The internet and technology is so deflationary that access to information is pennies on the dollar now. So this is First Avenue. Very seldom do we come over here. E. Monica B is here. Says, hey Tom, what's up? Will M, good to see you as always. Melissa White. Wow, we have more FDNY coming here. 3 trucks now. Hope everything's all right. Wow. Photos from around New York's rent is $4,500 to $17,000 or $18,000 a month. That's expensive, man. But look, it's a beautiful building. Beautiful building. And look, okay, so check this out. A world of luxury residences. Look at the pool deck here. 626 First Avenue. You got a pool deck. They probably have gyms. They probably have a bar, open bar. They probably have a ton of stuff there. But photos from around New York. Thank you for joining us. I see my friend Western Mass Dave's. Hello, Walks on Wall Street. What's happening? Not too much. Just strolling the city. It's not too... Oh, look, now we have an ambulance coming. Hope everything's going to be all right. Maybe some medical emergency. But we are near all the main hospitals. I think NYU's Children's Hospital is over here. We'll take a look at that. We're never over on the east side, so it's kind of cool. Hey, RS, is you are right by the NYU ER. You are correct. Big shout out to all of our medical professionals in the city. Definitely got us through a lot over these past couple years, that's for sure. I mean, my God. War Walker says your paycheck must probably be $30,000 every 2 weeks to live there. I think it's about 40 times the rent. Is pretty standard here in Manhattan. So if you want to rent a place for $2,000 a month, you need to make, as an individual, assuming you're not going to have a guarantor, you need to make about 40 times the rent. If you want, if you cannot, or if you don't, I should say, make 40 times the rent, you just need a guarantor that makes 80 times the rent. So it's very, very difficult for a lot of young people, maybe young professionals just starting out in their careers, to secure an apartment in the city. It's true. And that's why many people here in Manhattan live with roommates. You know, it's very, very common here. Gail Arnold. I'm not too sure. Usually we just do a 2-hour stream and call it a night. Okay, so we're on the corner of East 34th Street and First Avenue. If you guys have been enjoying the live stream so far, feel free to hit the like on the video and subscribe to the channel if you are new. We start these live streams at about 8:30 p.m. Eastern, walking around the city between New York and Miami, talking about the financial markets. Yeah, Robert, per year. Excuse me. Maybe I misspoke and said per month. Could you imagine that 40 times per month? Thank you for that. Yeah, it's 40 times per year. Definitely misspeak there. If I said 40 times the rent per month, geez. Then nobody can live here. You can only live in New York if you're like a big Saudi prince or something like that. All right, let's check out the NYU main campus, the medical center here. The Children's Hospital. Now, I think everybody would agree with me here in the chat that the people, the men and women who work here at the Children's Hospital, these people really do God's work. I mean, these people are just fantastic human beings all around. And we need them, and I'm very thankful to have them. D. Wood, I did hear about that, and I think I know which one you're talking about. And the gentleman, I actually may not want to say it, I don't want to bring attention to it, but I did hear about that horrible, horrible elevator accident. Check this out. You have a Dalmatian balancing a New York City taxi on its nose. That's cool. I've never seen this thing before. All right, let's head back in a little bit to Midtown, everybody, because it is very windy and it's actually getting a little bit cold here. And once again, here is the view on the Empire State Building. So I wanted to bring up just one concern I also had as it relates to inflation. But before I do that, I want to bring everybody's attention to a very famous Federal Reserve president that goes by the name of Neel Kashkari. And we actually heard from him today. Hold that thought. Let me just try to make this light. So we're crossing First Avenue. We are headed westbound. All right, we made it safely, thank God. All right. So Neel Kashkari, we heard from him today. And it's so, well, I guess it's not, what I'm trying to say is it's funny what he said, because we've been hammering on this for the past, I don't know, 2 months, 3 months. All right, hold on, quick inflation check. 2 regular slices and a Coke for $6, under $7. That's a good deal. That's a good deal. There's some regular slices of pizza by Penn Station for like $5.95. It's ridiculous. It's a good deal. I'm not sure how good the pizza is, but that's actually a good deal. So Neel Kashkari came out today and said that he sees the Fed funds rate going to 5.4%, 5.5%. And this is the same sort of speech pattern that we've been hearing from many of the other Fed presidents over the course of a couple months. And this sort of ties into, you really have to watch your own personal cognitive biases. And I'm speaking for myself too. Check out how beautiful the fire escapes are on some of these buildings in between 1st and 2nd Avenue. Love these style buildings. And now that we're in New York, Federal Reserve President, or New York Fed President, John Williams, last month at the New York Economic Club, came out and said something very similar. He sees interest rates, or the Fed funds rate, staying elevated and holding high all throughout 2023. Now, there's a lot of people that have been arguing this Fed pivot, that the Federal Reserve is going to pivot and they're going to just start cutting rates immediately. And I really, really don't think that's how it's going to play out. I think a lot of people are going to get caught off guard here. I'll give you one more shot of the entrance to the Queens Midtown Tunnel on East 34th Street. Now, the Fed, as we talked about yesterday, could very well take the Fed funds rate to 5.5 and just leave it there for a year. And that is going to put a ton of pressure on the stock market, and it's going to put pressure on valuations. I guess it's one and the same definition, because we've been talking about a lot of these companies. One of the only reasons why they're able to survive is based on cheap money. They can continue to borrow at low rates, almost to the point of in perpetuity over the past 14 years, to service their existing debt, to hire employees, to keep their stock price propped up so they could sell stock to, have employee compensation. But if we live in an environment with the 5.5 Fed funds, what is that going to mean for the borrowing costs of a lot of corporations? Well, it's going to be a lot more expensive than that, and that could, put a lid on a lot of, I would say, stock market gains for a while. Now, it doesn't mean it's going to be an environment where we can't make money, but I think you're just going to have this fundamental shift from high beta and extremely high growth stocks to companies who are generating ample amounts of free cash, and earning money right now. So Neil Kashkari came out again and said the same thing. He sees the Fed funds rate going to 5.5 and staying there. John Williams said the same exact thing at the Economic Club in New York last month. I don't know how much more clear they could be, because I've been hearing it still on CNBC. A ton of people are calling for this pivot. So I guess I want to throw it back to you guys in the chat, because this is just my personal opinion. My opinions mean nothing. Do you guys think we're going to go to 5.5 and stay there for a year? Or do you think we're going to bring it to 5.5 and then automatically, immediately start cutting and cutting and cutting? Hey, Paul Medis, what's up? It says, Tom, the Federal Reserve insists no relief well through 2023. Mike sees as it's kind of nice getting actual money on things like savings accounts. Enjoy it while it lasts. That's also a very good point. Mike C, that's a very, very good point, because, if you think about, when I would say like when my grandparents and parents were my age, we actually rewarded savers in this country, right? We would reward that behavior of saving your money and investing your money for a later date and a later time. With artificially suppressed rates over 14 years, that creates an automatic environment of risk. I mean, think about it. To Mike's point, if you were a diligent saver, if you did the right thing, if you got up and you went to work every day, right, over the past 14 years, and you saved your money in a bank, the government and the Federal Reserve was essentially just giving you a big, fat middle finger in your face and calling you a sucker. And the reason for that is because when rates are so low, it forces market participants to seek risk and to generate return. And that forces money to flow into the stock market, to flow into real estate speculation, to flow into these crazy high leverage derivative instruments. So you're rewarding big risk takers, which can get out of hand, and you're punishing savers, diligent savers. It's actually a really good point. It's a really good point. Michael Joseph's bonds are looking attractive now. Clark Rumsey is here. I want to take you guys I want to walk a couple blocks this way and up to show you guys the neighborhood. There are some interesting bars and eateries here, actually. This one is called something a little bit provocative here. Hey, Little Larry Sellers, what's up? Good to see you. Dan Zangs, Tom, do you think with the current high interest rate, it could be a good time to invest in CDs, leave your money there for a few years? Maybe. I haven't really checked the rates on them, to be quite honest. But, like many of the chatters were saying, bonds are getting rather attractive here. We know the correlation between the bond prices and rates. So as the bond market sells off, right? And this last year, 2023, by the way, or 2022, was the worst year for a baseline 60-40 portfolio, the worst. So 60-40 essentially means 60% weighting in traditional equities and a 40% weighting in bonds. Well, here's the problem. 2022, stocks got freaking clocked, and so did bonds. Look at TLT, look at JNK. But now that the bond market is sold off so much, yields are actually attractive. So, is that going to entice a lot of people to flood back and start buying bonds again? Maybe, but I don't know. Where is the TLT today? How did TLT perform today? I didn't even get a chance to check. Zozo Bob says, Tom, CDs suck unless they are paying you 10% or more, like they did in the 1980s. Yeah, I mean, Zozo Bob, think about that. I wasn't even alive to experience what it was like to be rewarded for saving my money. Isn't that kind of crazy? Maybe many of you watching that are, around the same age as me. But I never sort of grew up in that environment where if you just saved your money diligently, you were rewarded, which is kind of crazy. Yeah. Hey, D is here, says hello from Algeria. Hey, D, welcome. That's why I can't set it up. Okay. Are you all good? I know, Richard Vogel says 10%. This looks like an interesting faux place. Let me give you guys a shot of the sign and as well as the inside. Michael Joseph says I bonds are good because they cover rising inflation. I think there may be a limit to that, correct? Maybe a $10,000 limit per family. Little Larry Sellers says I think CDs were around 7.5% in the mid-90s. That's good too. Now, here's another thing we have to think about, right? As we talk about interest rates, I think it's most important to talk about real rates. And that is obviously factoring in inflation. Oh my God, look at this guy. That thing is massive. It's like a bear. Daryl says, Daryl from Chicago says, Tom, a savings account used to be 5% or more. Yeah, so put that into perspective, right? You could work a regular job, right, a regular 9 to 5, be a hard worker, take your weekends off, hang out with the kids, and just diligently invest and save your money. Guys, a 5% annual rate of return, it's significant, okay? Some of the best investors on the street struggle to make, a 7-8% return. I would, if somebody came to me today, really quick, here's the Murray Hill Diner. If somebody came to me today and said, Tom, I can guarantee you that every single year you'll make an 8% rate of return, I'd take that deal all day, every day. I mean, you would be ridiculously wealthy. Now, the market in general, right? Let's say if you dollar cost into the S&P major equity index. I love the old style diners. Too bad that many of them in New York have been going out of business. But I love the look of just being at a classic diner, maybe meeting up with an old friend. I don't know. I kind of like this better sometimes, right, than going out to a big fancy restaurant. It's just fun. But again, if you can compound out for 5% a year every year for the rest of your life, you're going to be ridiculously wealthy. Now, the S&P 500 since inception has generally averaged about 7 to 10%, I think, in that range, which is phenomenal, right? That's a phenomenal rate of return. Hey, I want to be GMOs. Savings accounts became really only safe since they had FDIC insurance, but it really encouraged speculation and risk outside safe and insured accounts. Yeah, I mean, you're always going to get that risk, right? So FDIC insurance is all the way up to what, $250,000, I think. I don't even know. I think it's $250,000. But at the end of the day, I mean, if you're running money, right? If you're running a lot of money, it's not like you could just. You got to sort of take the risk, I guess, is what I'm saying. But I get it. It's uncertain times. Ooh, that was the littlest rat I've ever seen. Ran away before I could show it, but. Evan Weeks is Tom, 4% on T-bonds, 4.25% for 2-year note, looks like. Where did the 10, Evan, good to see you, by the way. Hopefully you had a good Thursday. Where did the 10-year U.S. Treasury finish today in trading? 3.7%, something like that. Austin City Limits says, yeah, the FDIC insurance is about $250,000. Nakos is here. Says would love 8%. Now, speaking of a hedge fund that outperformed again this year and who's performing really well is Ken Griffin Citadel Securities. I think somebody tagged me in a post on Twitter or a Wall Street Journal article on Twitter highlighting the stellar performance of Ken Griffin Citadel Securities. So the tunnel is closed. Look at this, the Park Avenue tunnel. I guess it is closed for renovations. Looks like somebody's in there. Maybe they're doing construction or something. Celtech, I know. I think I got the same thing. All right, so this is Park Avenue. Let's head a little bit further into Midtown. Now, I told you guys they're shooting some sort of a movie in Koreatown tonight, and I kind of want to check it out. This guy's dumping his bike. He's doing something. Now check out the Empire State Building, all luminescent and fantastic. Matthew M's average return on solar stocks, 10%. Yeah, solar and a lot of the renewable companies have been performing pretty well. Now, I think one of the main catalysts for that have been a lot of this government stimulus. Or I should say a lot of these stimulus packages, spending packages that they've been passing to invest a lot of money into renewables, solar, and the like. Let me cross the street here. The Celtech is here. So Tom, I had 10 to 12% in the 1980s for G4 ever. Good to see you. Gary Carpenter says, I'm trying to get solar installation on my house. So I would be curious to hear about that because I've read a lot of mixed reviews. Now, again, I don't have solar on my house, so I would love for anybody who does have solar on their house to chime in. But supposedly the payback isn't worth it. Like, it almost never pays for itself. Is that true or is that fake news? I haven't done as much research as I probably should have to look into that. But here's probably one of the main, I would say, factors for that. You know, if you live in a really sunny state like Arizona or Florida, it'll probably pay off. But, you know, if you live where it's cloudy half the year, it may not pay off, even with all the government subsidy they give you. Rentense says it takes a very long time for you to pay back, and it probably depends on where you live, right? Hey, DM, thank you so much for joining us. Good to see you. Hawaii, welcome. Matthew M says, I've heard mixed too, but new check is changing. Oh, Michael Joseph says you just had it done. So what was the process? And, you know, because I'm sure you guys get hammered with all these YouTube advertisements as I do, that the solar guys are like, it's going to cost you nothing. I think ever since I bought my house in Florida, the algorithm knows that. So I've been getting inundated by these solar advertisements. Yogi says I get calls every day to put solar on my house. Ed T says my uncle got solar. He says it's great, but not convincing. Bree Graham says it's not worth it even in Arizona. I had Tesla take them off. Had to get a new roof. Interesting. So we're getting a mixed view in the chat here. Joe Driver says, Tom, it depends on your monthly costs from the start without solar for the payback. That's true. Depends on your usage. Vivian says, Tom, they added to escrow and it's not worth it in Florida. I didn't hear about that. I didn't know that. I think I'm going to do some more research into it. It is piquing my interest. But from what I've done my internet research on Reddit and stuff like that, it doesn't seem like it's a pretty good payback. Who knows? But I think over time, just like in anything, this is the Empire State Building, by the way, you're going to see costs being driven down. Usually, at the introduction of a new technology, it's always going to be expensive. But over time, I think it's rather deflationary. Silva is here. Says, hey, Tom, the Fed will likely take rates to target range of 5.25% to 5.5%. Siva, you're correct. And we heard from Federal Reserve President Neil Kashkari today saying that same exact thing. You're 100% correct. So, I mean, I can't give advice, but I would really, really pay attention to what the Fed's doing. Fed is the liquidity driver, so to speak, in this market. And, I would just say follow the trend. But you're right. Neil Kashkari came out today and said that same exact thing, reinforcing that belief. Celtex's lifespan for solar panels is 25 to 30 years. Now, I was watching this documentary. I'm sure we've all been there, where we go down the YouTube rabbit hole and we've come across these interesting things. Now, here's something I didn't know. As it pertains to the wind farms or the windmills, really nice Tesla. This is my favorite color, by the way. Sort of like that charcoal gray. Love this car. Speaking of electric vehicles. Now, for the wind farms, the recycling of those propellers or the windmills or whatever they're called are so horrible and so egregious that they literally just have to dig massive holes in the middle of the desert, in the middle of the country, and just bury them. That's horrible for the environment. We definitely need to figure out a better way for that instead of just burying them in the ground. But anyway, I never knew that. I never knew that's how the process worked. Zozo Bob's roofs usually last 20 years anyway. All right, everybody, you are now experiencing my favorite view of the Empire State Building of all time. This is right on the corner of 32nd Street and 5th Avenue in New York City. It's beautiful. I give it a 10 out of 10. And I think it looks even more unique in the clouds. It's a very dark and dreary Manhattan night. Hey, Gail Arnold says, Tom, we so appreciate the way you enunciate, explain, plan, or principle clearly. Thank you so much, Gail Arnold. I appreciate it. Dusty Cole says, respectfully disagree, Tom, about wind farms too. Yeah, I don't know too much about it. I just watched that documentary. But supposedly when they recycle them, they bury them. I did see the thing about the Tesla driving off the cliff, but I try not to pay attention to it because it's so depressing. Vivian says, when you buy a new roof solar system in Florida, you won't pay any state sales tax. The exemption is 100% for the state sales tax of any new solar installation, and it could save you 6%. Interesting. Now, Vivian, here's another thing that I wanted to bring up. I think I brought this up before. I am so surprised about how cheap my energy bill is, my electric bill is in Florida. Like, it's to the point where I think it's wrong that I may need to call them up and say, are you sure my meter is working appropriately? It's like $36. And I used to pay $36 for my electric in my studio apartment in Manhattan. So it's either it's broken, it's either something's broken, but I kind of like it. You know, Tom G makes a good point. So my home has all new appliances. They are the very environmentally conscious, like Energy Star appliances. So maybe that is the reason why. And I have a brand new HVAC system and brand new everything. So maybe that's the reason why. Richard Vogel says, Tom, my power costs a fortune on Long Island. Vivian says mine is $115. Oh, so maybe that's just Florida prices. Look, I don't know, but I could tell you with certainty my electric bill in a studio apartment here in Manhattan used to be $36. All right, everybody, we are in Koreatown. Now, they were filming a movie here before. You could see all this stuff, but they may have moved on out. I'm not sure exactly what they were filming. Wow, Beacon, New York's probably not as cheap as Quebec. When it comes to electricity, the cheapest in North America. Is that because of all the hydro electric power? Beacon, New York? Maybe that's the reason. Nina says, Tom, please call them up and ask if they can charge me just that in Southern California. Oh my God. Well, SoCal, you guys get a ton of sun. You guys should be having the solar on there. Paul Meddy says, Tom, you're getting a good bang for your buck. Look, I mean, I pay the bill. I mean, Richard Vogel says, Tom, $283 per month on budget for electric. What are you doing, Richard? That's crazy. Almost $250 a month for electricity? Do you have do you sleep with the lights on? That's insane, man. I mean, maybe that's what it costs on Long Island. I don't know, but here's some more of the movie equipment. I'm actually kind of curious what they were filming here. Gary Carpenter says your power bill is nearly $3,000 a year? Surely not a month. Now, I think I told you guys this funny story, not to get too far off topic, but I think you guys will get a kick out of it. So I just left my place in Miami, right? Had to come to New York on business. And I was so tired. It was just a bad week overall for me. I was having a really, really horrible week, not gonna lie. And I'm staying in this hotel in New York. And I finally put my head down on the pillow. I'm like, just what a horrible day. We've all had those days. And I'm like, you know what? I have a brilliant idea. I'm gonna check my email right before bed. I go check the email, this and that, da, da. So I check the email, and it's my water bill. And my water bill is like $250,000. And I almost have a heart attack. I'm like, what in the heck? Did I have a leak? I just bought the house, so maybe there's some weird loophole. Like, I was doing all the wrong things, right? I went on Reddit. I was reading all these horror stories about if you buy a home and the former owner doesn't pay the water bill, you're responsible for it. I'm like, oh my God, like I couldn't believe it. So I was so stressed out for 3 days. Turns out there was a big hack or system glitch, and my water bill, I obviously don't have to pay the $250,000. Now, I don't know the exact amount, but I posted it on my Twitter. I couldn't believe it. I'm like, freaking these people. And yeah, it was just a horrible experience. Now, looking back on it, right? It's like, okay, obviously, Tom, it was wrong. It was a glitch, right? Obviously. But if you're a first-time homeowner and, you're already scared to death, right? You're purchasing, property, hundreds of thousands of dollars. You're in your mid-20s, you're already a little bit nervous, and then you get, boom, and the bill was real. It's like, please pay now, $250,000 water bill. Anyway, I'll digress. Matthew M has just seen Florida news lady got an $8,000 bill. It was a leak. It's common in Florida. Oh, damn, dude, don't say that. Please don't say that. Please. But yeah, anyway, in my personal experience, let's make a left here. It was a mistake. Ren 10 says I'm dying laughing over here. I'm glad you found some humor in that. At the time, I'm sure my face went totally pale white And I was just as I was about to go to sleep, I'm like, I got a brilliant idea. I'm going to get my phone. I'm going to check my email. Ooh, one new email from, whatever municipality I live in Florida. I won't disclose that, but it's like, please pay now and sign up for auto pay. Here's your bill, $250,000 for water. Anyway, hey, Gina Thomas is here. Good to see you. Welcome. We hear some random shrieking out of the 99-cent dollar slice place. I think we're going to go to West 28th Street and make a right. I think we just may make it to the, what's it called? The High Line before it closes. We'll check it out. We haven't been there in a while. Hey, Harjot is here. Says, hey, Tom, welcome. Bagels and Walks, good to see you. Rose's electric bill, $250 a month in Southern Texas. During a normal month in a 2,700 square foot home. Oh my God, dude. 2,700 square feet. Jeez. That's like a mansion compared to what I'm used to. That's awesome. Yeah, all of those homes in Texas, I see them on the internet. These things are massive. I wouldn't even know what to do with 2,700 square feet. Now, I was telling this to my family the other day, not to stray too far off the topics, but we're sort of on topic. We're talking about the housing market. So obviously, living in New York, being in New York, right? You get very, very used to living in very small spaces. So as you guys know, one of my first New York City apartments was literally a walk-in closet in my brother's friend's apartment. Quite literally a walk-in closet. I've lived there for 4 years. So I got very accustomed to living in small spaces. So my house is, I think, 1,200 square feet. It's a small house, right? In comparison to, normal standards. But after living in it for about a year, I just don't know what to do with all the space. Like, I probably utilize like a fraction of the actual available space. I just don't even know what to do with it all. It feels like a mansion to me, and it's only 1,200 square feet. Anyway. Billy's like 2,500 of those square feet is for your gun storage in Texas. I'm not hating on it. Love that. Evan Weeks is Tom married with 2 teenage daughters. That 3,200 square foot in my house is very utilized. Yeah, I can imagine. 3,200 square feet's a lot, man. You guys would definitely be overflowing out of my house then. Hey, Julia M, happy birthdays. Tonight was my birthday and I went to, in New Jersey, PAC Center. Very cool. Well, Julia, happy birthday to you. Hopefully you had a fantastic night. Thank you for choosing to share the remainder of it with us here at Walks on Wall Street. So happy birthday to you. Thanks for being here. I appreciate it very, very much. It's an honor to celebrate the birthday festivities. Matthew M says, my sister used to live in Amsterdam. Also living in very small spaces there. Amsterdam would be a cool place to visit. Yeah, Bagels and Walks says, Tom, sure the city seems quieter after the holidays. You're right. Tourists completely out. It's kind of nice. It's a little bit of can take a breather here for a moment. These are some new-ish apartments, probably went up within the last 7 years. Hey, Evan Weeks, we're about to downsize as we move to New Jersey. Given interest rates and home prices right now, I'm hoping to hold out and work remotely as much as I can until prices and rates come down. Yeah, I mean, Evan, I think that's a good plan. For first-time home buyers, in my personal opinion right now, I would sit tight. I think you guys are going to get a good opportunity here. So if you're moving to a new city, if you're moving to a new place, I would rent for maybe the next year. If it were me, I mean, I'm not telling you guys what to do. You can do whatever you want. But I would rent. And throughout that entire year, I would be hunting for properties. Don't buy anything, but just every weekend look at something, because I can almost guarantee, if I had to bet on it, that property valuations are going to come down. I think you guys are going to get some good deals, because think about being a first-time home buyer. Last year, 2021, and the latter part of 2020, bidding wars, artificially suppressed rates, people paying $100,000 over asking, right? Some people waiving the necessary home inspections. That is the biggest rookie mistake ever, okay? Don't be a sucker and feel the need that you need to be in a bidding war with some guy and waive the necessary home inspections, okay? I think the best piece of advice I've ever gotten is there's literally a home on every street corner in America, okay? There's a home on every street corner in this country. They're not going away, okay? They're not going to get up and fly away. You could be patient and you could wait for the right time to get a good deal, because the money made is at the purchase. You make all the money in the deal if you buy right and you sit tight, right? Not being a rookie and going $100,000 over asking and waiving all of the necessary inspections. That is what you call being a novice. And we are professionals and we don't do that. So I think you guys are going to get a good deal, I promise. These apartments probably have amazing views of Midtown. Also, One World Trade Center too. Gail Arnold says, Tom, we need to take the emotions out of home buying. I agree. Yeah, so as rates go up, we've already seen the sales transaction volumes taper and fall off a cliff here, as we've been looking at a lot of the indicators like the National Association of Realtors, existing home sales. Those have been falling off a cliff. So I'm optimistic about home prices coming down. Yeah, Johnny Rockberry says waiving your inspection is an extremely bad idea and should never be done unless you are planning to tear the house down. I agree, but unfortunately, a lot of people were doing that crazy stuff. Were waiving inspections because they were trying to, outbid one another to get a home. And that is definitely the wrong way to go about it, for sure. Now we're headed downtown. We probably can't see the World Trade Center because it's so cloudy. Hey, Brian Forrest is here. Good to see you. Lost in the Curve. This is window units and smaller house. 1,500 square feet and under can save money versus Central Air. Williams is my fixer-upper, got a terrible home inspection, but just takes a little bit of elbow grease. I think that's the way to do it though, right? If you could find a property that the vast majority of people would look at and say, oh, it needs this work, it needs that work, but again, the money is made at the purchase. And if you can do minor improvements, you can drastically increase the value of your property just by putting in a little bit of time and effort yourself to make those necessary repairs. Now, assuming it's not something monumental, right? Like a big structural issue. Like if there's like a foundation or a structural issue of the property, then that's like a big issue. But if there are minor things that you can do to increase the value of your property, I would do it. Okay, everybody, we are coming up to Avenue of the Americas and West 23rd Street. Now, if we make a left here, you're gonna walk all the way to Madison Square Park, or excuse me, Union Square. No, excuse me, Madison Square. Yeah, I'm getting all messed up here. 14th Street, Union Square. Here we go to the Flatiron District and the like. Now, we've already been streaming for an hour and a half. I don't think we're going to be able to go to the High Line because I think it's closed because it's after 10. So we'll head in. Tomorrow I'm going to try to stream a little bit earlier because I want to get up on the High Line. Hopefully it's a little bit clearer. But usually we could see an unobstructed view of One World Trade, but it's so cloudy out tonight. Now, I think I have just one more thing I wanted to discuss and cover. And we may have talked about this before. I'm not sure. I don't remember. So we'll bring it up again. Now, there's been a lot of chatters who have been bringing up gold and silver. And I'm not a big gold bug or a silver bug, but I think it's important to pay attention to it. And one of the most interesting trends, as we've been talking about the Federal Reserve tonight, right? We talked about Neil Kashkari coming out and saying he thinks Fed funds rate's going to go to 5.5. But central banks, not only the Federal Reserve, but central banks globally have been purchasing the most amount of gold they've ever had in history. And I think that's very important to pay attention to. Now, if you look on a monthly time frame, if you want to look at the underlying physical commodity, or if you want to look at the ETF or the paper that'll give you exposure to gold, you can type in ticker symbol GLD, or if you want to look at the paper silver, you can look at SLV, and they're starting to perform okay. And if you look at gold again on that monthly time frame, it looks to be one of the largest cup with handle patterns I've ever seen in my life. Now, I don't own anything, but I think if we crack new high territory in gold, I'll have to get involved. Any thoughts there? Anybody maybe who's a big gold or silver bug in the chat? AM says European Central Bank is printing paper like crazy. So is the Bank of Japan. Now, Bank of Japan is really crazy. They came out and announced a couple weeks ago they're going on another bond buying binge. Emergency plunge protection team there. Hey, Marcelo Gill, what's up? Good to see you. Thanks for joining, Marcelo. Hope you're well. Karina Thompson is here. Says hello, Tom and friends. Good to see you, Karina. Check it out. It says, which is a better play, gold or silver? I don't know. I think just whichever one is. Well, I don't know either, but here's what I would also look up. You guys want to do some interesting market research, and we'll report back and we'll talk about it together as a collective. Check out the Dow gold silver ratio, the Dow silver ratio, and the Dow gold ratio. Maybe we'll talk about that. Sally is here. Says, hey Tom, what's up? Kevin Bates says, you think silver is better? Pond Viewer 12 says, excellent point about gold and silver, Tom. Note this evening's rally and then despite Wall Street slide. This is the Pond Viewer, yeah. Now, could that potentially be... Wow, look at this. I always love looking at the mini skyline over Madison Square Park. Look at that luminescent gold top there. But yeah, I think you make a good point. So could this potential move in gold and silver be a potential forecast of the market saying that the Fed is going to have to cave and start printing more money? Potentially. Right? Because a lot of people were so surprised that gold and silver were going down in tandem with equities over the last year. Where's that noise coming from? But here's the thing, it actually kind of makes sense if you think about it, because gold and silver, right, is generally used as a hedge against inflation, I would say the inflation of fiat currency. So in 2021, when the Fed was printing and printing and printing and our M2 money supply was going up and up and up, equities were performing really, really well, and so was gold, and so was silver. But as the Fed took its foot off the gas, both sort of declined, and we actually had a big rally in the dollar. Think about that. It's almost like everybody had a free-for-all buying dollars. That was a euphoric cycle too in the Dixie. Hey, the dark horse is my gold at $350 and my silver was around $8 in 2001. Matthew M's precious metals are in chips, hence the shortage of chips and demand for metals. That's also really true. Let me wipe the camera lens. Dr. Longus says, buy silver, you won't regret it. I have a teeny tad bit of physical silver, but nothing, it's like nothing to move the equity needle. It's more so along the lines as a collectible, right? Anybody like coin collectors here? But in terms of like paper, oh, what do we got here? New York played Montreal. I'm assuming what? Rangers or Islanders? And maybe any hockey fans? Rangers or Islanders are playing? I don't know. But I don't own any paper, silver or gold. Like I have no position in GLD or SLV. Oh, the Rangers played Montreal? Did they play here at the Garden? Maybe we'll see a lot of people coming out. Carl says Rangers. Oh, they played in Montreal. Ah, I got it. I could have sworn last night we saw, or was it 2 nights ago, we saw some hockey game. Rangers maybe coming out. Yeah, so maybe in the Garden now and then Montreal later, or today. You know, rain, sleet, snow, hail, sunshine, cloudy day. This place always has a line. I don't know what the big fuss is about. Anita Gelato. This must be the best gelato place on the face of the earth. Paul Meddy says, full disclosure, Tom, tech fuels the need for gold. Run with that. Now that I'm thinking about it, it's interesting. So could there possibly be a correlation with semiconductors as well then? Because here's one of my other main concerns. As we are trying to look for any type of bottom indicator, I'm totally convinced, and I could be wrong, but I am so convinced that if we don't have semiconductors getting in gear here and starting to rock, I really find it hard to believe that the major equity indices could turn up into a new bull market, because the fuel of a lot of the main stocks that have a huge weighting in the index sort of depends on semiconductors or chips, cloud computing, smartphones, IoT devices. Look at this place. So liquor infused ice cream bar. 4.9% alcohol. Now, I don't drink, but this place looks so cool inside. It looks like an exclusive lounge. Hey, CR, thank you for joining us, and please have a good night. But yeah, I think it's really hard to get bullish on the overall general market until we have a upturn in the semis. And if you don't want to look at the individual, I would say names, you could look at a benchmark or an ETF, ticker symbol SOXX. And that is the broader index that tracks a basket of semiconductor stocks. This is the brand new Ritz-Carlton, by the way. This place is supposedly really nice. Let's actually take a walk past it. Susanna Q4. Anybody stayed at the Ritz so far? Anybody? Jacqueline Morris says, I work in the semiconductor industry. We can't make chips fast enough. Thank you for that insight. Which particular... Because I know there's a lot of different nuances here. Do you make chips for data centers? For smartphones, EVs, or anything in particular? Well, look at I think these are original windows in this building too. Brendan O'Brien, yeah. I did too. Well, this is the brand new Ritz-Carlton. Jacqueline Lawrence is auto, phones, and military. Thank you for sharing that. Now, I could see why you're seeing that demand. You know, the military, you know, if you look at some of the leading, I would say, I think Lockheed Martin was down yesterday, but on a relative basis, Lockheed Martin, a lot of the other defense stocks are performing well. You know, we're definitely not holding back on sending money to other countries to fuel wars, so missiles and drones and all that other stuff. Now, I shot a standalone video yesterday. If you guys want to go to the channel and take a look, I posted it at 7. I highlighted this place. Look at how unique this is. It almost looks like a wave at the bar here. Doesn't that look cool, this place? Now, many of the viewers were saying this is a Greek restaurant. This place looks nice. Jacqueline says smart cars are in demand. You know, to piggyback off what you're saying, I remember this time last year, or I would say Christmas last year, I was covering an interesting article in Investors Business Daily, and it was about a company named Polaris. I think everybody knows that. They make like sports, like snowmobiles. Hold on, let me wipe the camera. Polaris, right? Yeah, they make snowmobiles, ATVs, outdoor. They make a ton of stuff. Anyway, there was so much crazy demand that they had to ship the snowmobiles and the ATVs without any of the electronics, like the center consoles, because there was a shortage of chips, big semiconductor shortage. So chances are, if you bought a snowmobile last year, you actually bought it without any of the electronics and it shipped to you after the fact. This is another really nice shot of the Empire. You can hear the subway below us. Look at the purplish glow from Midtown. That glow is coming from either Herald Square and Times Square as well. You can see the Hudson Yards in the distance. Hey, Alexander M says, hey Tom, how are you? What are your thoughts on Hey Arnold? Hey Arnold. Oh, the kids show back in the day? I like it. I like it a lot. Miss Brown Eyes, thank you so much for your very kind $4 donation. I appreciate your support. Miss Brown Eyes, your donation helps the stream keep chugging along. Thank you so much. My good friend, Miss Brown Eyes. Look at how beautiful the architecture is on this building. Yeah, but I like Hey Arnold. I'd give it a 10 out of 10, I think. I like it. I like it a lot. Now you're getting me thinking of all other shows I used to watch. What else I used to watch? I wasn't really a big TV kid, but there was a lot of good shows back in the day. A lot of good shows. Hey, Pup is here. What's up? Good to see you. Jimmy Neutron, yeah. Now, all the kids these days are into Roblox, right? That's a publicly traded company. We've talked about that company on this stream. Now, is that a fad? Obviously, I don't have enough time to pay attention to that, but you know, if we think about what Peter Lynch says, he's like, some of the best investment ideas I've ever gotten in my life come from just following my wife and kids around the mall. Like, what are the kids interested in, right? So is Roblox just a fad, or does anybody here that has kids, are the kids still playing that thing? Or they still like it? Because last year you couldn't turn on CNBC without some analysts pumping that stock. Ron says Roblox is great. So kids still like it. Evan says my teenagers still play Roblox. So how do they make money? Right, and excuse my ignorance, by the way. I haven't really studied the stock. Is it just through all in-game purchases or something like that? Crypto Memes is my 8-year-old plays it. So how do they generate revenue as a company? Is it a lot of in-game purchases? Is that it? Kenny says in-game purchases. Okay. Oh, and you could program for it. Interesting. You know what? I'm actually going to do some, when I get back on the Long Island Railroad, I'm going to do some diligence on this stock. Because quite frankly, I haven't really been paying attention. Joe Driver says Roblox is huge. I'm assuming they don't have any earnings. Pups says it's probably like Minecraft. So a lot of people in the chat have their kids playing it. Crypto Memes says other kids learn how to program their own games and other kids make in-game purchases. So it's actually productive. That's actually very good, actually. I'm gonna make it a point. I'm gonna spend some time to research this, because I think as I've been getting older, it's very easy to dismiss things as nonsense. But at the end of the day, I think kids are I would say the younger generations are really going to be the drivers of the new world. And just because I think it's nonsense doesn't mean other people think it's nonsense. So I'm actually going to have more of an open mind here, and I'm going to do some diligence on this, especially now that the stock is pounded. So thank you for all the insight. Oh, Joe Drivers is not my kids, but my friends' kids play it all the time. Yeah, Pups has agreed, Tom. I always dismiss things as nonsense because they're new. You know, I was watching, I'm not even sure how I came across this video. I forget who the guy was, but it was like one of those short clips. And I think it's good advice, but also you got to be careful with the advice. In a general sense, it's good advice, but a lot of times, like, things are clearly nonsense, right? But the advice is, you know, make sure that, you know, you don't turn into your parents. And it wasn't saying that in a literal sense, like you shouldn't be like your parents. It's sort of giving the context, oh, they're taking down all the Christmas stuff at Macy's. It was given the context, and how do I interpret it? Usually how I interpret that is like, you know, remember on the Today Show, Matt Lauer made an absolute a-hole out of himself by saying, who would ever go on the internet? I mean, why would I ever use email? I could write a letter and go to the post office. You know, it's like a lot of that stuff, right? Like people mocking the iPhone. Why would I ever use an iPhone when I have a BlackBerry? You know, things like that. So you always have to have an open mind. And just because you think and say it's nonsense doesn't really mean it is. So I think that allowed me to have more of an open mind about things and not be so dismissive. Also, yeah, crypto meme. You know, also, and I know it was sort of David Letterman was trying to be, you know, fun and have a joke. That's his job. He's a funny comedian. He's probably the best to ever do it. But Bill Gates, back in the day, and this is one of my favorite interviews for that perspective. Bill Gates was on Letterman back in the day. And you guys got to see this interview. I think I brought it up a couple times now. Here we are at Herald Square. And he was interviewing Bill Gates about the internet. And Bill Gates is like, yeah, you could watch live sports games and do all types of things and chat with your friends. He's like, you know, does radio ring a bell? And then, you know, the audience is laughing. And then the internet turns into this huge, crazy thing. And I know, you know, he was trying to be, you know, funny, but that's how a lot of people thought. A lot of people thought the internet was going to be totally nonsense. And now look, we're live streaming in front of like 800 people. I don't know how many people are in it because we have a new streaming software. But, you know, there's probably, you know, this wouldn't even be possible 7 years ago to stream in front of, you know, 800 plus people, right? Crypto meme says blockchain technology will secure the new internet. Maybe. It's possible. Now, that's another thing. I do think a lot of the altcoins are fraught with fraud. And I'm holding firm on that. Like, a lot of it is total fraud. A lot of these NFTs are total fraud, but I do see value in Bitcoin. But I don't see value in a lot of this other stuff. Hold on, let me wipe the camera lens. Alexander M says, Tom, what do you think about the retailization on Web3? Could you clarify what that means? What do you mean by retailization? I don't know what that means. Hey, Evan Weeks says, Tom, Microsoft made much the same mistake IBM made when they licensed DOS from Microsoft, thinking that the value in computers was in the hardware. They thought the value was in the OS and Windows. Well, they pivoted, right? He was a little bit late to the pivot, but they definitely made the pivot nonetheless. It's a good point, you know, and I think that sparked the saying, software is eating the world. And it really has. Software has totally eaten the world. I was actually talking to my good buddy today, who's a hedge fund manager. He's an older gentleman, right? So he's not as tech savvy, so he always pings me on the side when he has a question about things, and he's looking at his CRM. And he's like, which one do you suggest? Which one would you use? I'm like, look, if it's a one-man operation, only like 5 people are going to use it. You know, I would not go with Salesforce. You know, it's a premium product. I would go with like a Zoho, right? It's going to be a lot cheaper for you. It's scalable for 5 people, and it'll do everything that Salesforce can do, but for a cheaper price. Now, where you do need Salesforce is if your org is very, very big and you have to streamline a lot of processes, right? So for example, you know, maybe you have a huge sales team and you need a lot of different API integrations into Zoom Info or Marketo and other softwares like Okta, right, for your IAM. Then yeah, you probably need to upgrade to, you know, maybe like an Oracle's NetSuite or a Salesforce, where you could send customers DocuSigns, you could take payments, and you could route orders to your warehouse automatically. You know, that you need to scale up and pay a lot more money for the software, but you know, if it's just a 2 or 3 man operation, just use Zoho. No big deal. Oh man, it's getting cold actually. Alexander M says retailization equals how do you think ordinary people can get involved in investing and making money in Web3? Hey FredX, what's up? Well, I'm very skeptical because I think there's a lot of opportunists that I've seen, and I think I was born with a little bit of an inherent contrarian nature, which makes me a tad bit cynical. So a lot of this Web3 stuff I think is just total nonsense. Like, it's just total BS. And I think a lot of opportunists have hijacked the cryptocurrency trend, if you will, to try to siphon money out of amateur investors. At least that's what I've been seeing. So will there be real use cases for it? Yeah, but I think a lot of this stuff now is not it. Looks like a broken window pane here. But that's usually how market cycles work, right? Just think about the 2000 dot-com boom and bust. Everybody and their brother thought just because the company had a .com at the end, it was gonna turn into like this $1 trillion organization, when in actuality, some of these companies that were trading publicly had no revenue. They were like pre-revenue, right? So you had so much speculative excess and a lot of opportunists doing nefarious stuff, like pump and dump schemes. And I think you're seeing the same thing in the cryptocurrency environment. Will that change? Yeah. But I think right now, I'm just not seeing a lot of real stuff there. Will M says, are we talking about Twitter again? No, but we can if you want. Hey, Nina says, hey, Tom, good to see you, Nina. Thanks so much for being here. But if you guys are enjoying the live stream so far, feel free to leave a like on the video and click the subscribe button if you're new. We tend to go live at 8:30 p.m. New York time, and we'd love to have you guys joining in on the conversation. We are now at Bryant Park, and it's so cloudy you can't even see the top of the One Vanderbilt building. Matthew M says, yeah, I believe Meta will go up eventually. It's all AI involved. You know, Meta's actually been outperforming a lot of the other FANG stocks. Hey, Raul says, hey, Tom. Is it raining in New York? I think that's what that means. I think it is. Evan Weeks says, you think Meta is way, 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 way too early? Potentially. I just don't see anybody wearing things on their face all the time. At least not yet. At least not yet. But Evan Weeks makes a good point. You could be right, but you could just be too early. And that is why timing is very important. And there's a lot of luck involved too. Is it snowing in New York? It is not. Truth teller, says Tom, the VR headsets will make you go blind. I don't know about that. All right, everybody, we are outside Salesforce Tower. Mark Benioff announcing they're laying off 10% of their employees. I think this is just the start. And then you have the Times Square ball right here. Alexander M says, I think the metaverse is right, just not right for this decade. I agree. Look, you never know how fast things can change, by the way, so you never know. So speaking of the Oculus headset, does anybody here have the Oculus headset or have ever tried it? And if so, what has been your experience with it? Because I've never even tried it, so I think it may be a little bit negative for me to talk about it. Hey, Banzil Buck says, hey Tom, have you talked about Walgreens earnings? I haven't. I was so busy today, I don't even know how they reported. Maybe when I get on the train, I'll play a replay of the call. But how did they report? Meld says, Tom, it's late. I'm worried about your sleep schedule. You don't need to be worried. Carl says, we use VR in college. Very nice. Love that. Eric says, one at a casino over the break. Just a few sessions on it. And I'm sold on Meta stock. Adding to it. Well, Meta has been pounded, but it's actually trying to form a durable uptrend. I think if it breaks above the 200-day moving average, maybe there's something there. But I'm watching it closely. We'll see. I've never tried it, so I should probably try it before I knock it. Oh man, we've already been streaming for 2 hours. Let's head back downtown, actually. I lost track of time. Time flies when you're having fun. Hey, Con I Am is here. Good to see you, Con I Am. Hey, Legends. Our Legend says, hey Tom, I just joined. What is going on? Not too much. Tonight, we talked about a lot of things. We talked about, I think at the very, very beginning of the stream, I've been noticing a lot of people, especially in New York City, and if you saw this on my Twitter, you could follow @WalksWallStreet. I posted about it. I've been seeing an uptick in vehicles in the city getting boots on their cars. And I think that's a sign of the times that people are falling behind on their bills. Now, maybe it's a pie in the sky idea that we could use that. Travel Niece says, wipe your camera. I'm trying. I think it's just too wet. It's not going to work. After you wipe it too much, we just kind of got to live with it. I think it may be the sign of the times. People are getting behind on their bills. Who knows? And we talked about the cost of, getting your vehicle out of the boot, which is almost $500 in and of itself. It's ridiculous. It's almost like a tax on the poor and the working class. Mike M says car loans are becoming late too. Higher prices, lower income equals inflation. Yeah, I would like to see some data on that, on the default rates. I think that's very important to look at too. And the thing is, during the pandemic, a lot of people took on huge car loans of like $1,000 car payments, which is nuts. So that could be an area that is seemingly frothy. The dark horse is used car sales tanking. I think I gave you guys a recommendation of a Twitter account that you should follow. It's probably one of the better. Well, there's actually 2 Twitter accounts. I'm going to give you guys 2 real recommendations. Well, number one, if you go to my Twitter page, I posted 4 Twitter accounts that you guys got to follow, that if you really want to learn how to invest the proper way, you got to follow these people, right? Well, I'll just leave it at that. Really, really quality research, very quality fundamentals, and very, very seldom do I ever endorse anybody, but these are fantastic. Now, there's also a guy, I think he lives in Manhattan somewhere. I think his Twitter account's called The Real Estate Guy, or the Strip Mall Guy. Has anybody heard of this guy? Ooh, that was a massive rat. Did you guys see that? He just crawled right under there. Oh, he's right here. Oh, damn, that's disgusting. Man, that's gross. Yeah, so check out the Strip Mall Guy. He's this very successful guy, an anonymous Twitter account that shares his lessons about his success in buying strip malls all over the United States. And I think he lives on the Upper East Side. It's a really interesting Twitter account. Yeah, I know, everybody's like, call the rat czar. Now the thing is, it's such a misty rain, it's difficult. Alexander M says China is back. What are your thoughts, Tom? Yeah, we talked about that. I think we had the entire stream last night about that. I think it's undeniable. China has been outperforming, and so have emerging markets in general. Emerging markets have been outperforming U.S. equities, and I think it's a trend to watch. Now, obviously, there's some massive risks with investing in China for obvious reasons. Can you trust the financial reporting? Can you trust the financials? I don't know, but price and volume in the market tells all, and these Chinese companies are performing very well. Very, very well. Hey, 4G Ever, what's up? Now, next week, everybody, we will start back up the Substack of the Behind the Street newsletter. So if you're interested in reading my market thoughts, if you type !news, NEWS in the chat, the Nightbot will drop the link where you can punch in your email and you'll be signed up for free to receive my investing newsletter. I think you guys will enjoy it. And we will be starting that up next week now that we've finally migrated over to Substack. John G says, you know to know what you're doing. You got to know what you're doing before they give you a loan. Go to another bank and practice speaking with them. Juan Vasquez says, in 20 years, China will have to make a decision. Total economic collapse to go fully capitalist and embrace capitalism and freedom, says Juan Vasquez. Interesting. Now here we have the beautiful Grand Central Terminal. Saeed says index fund investing is a better option. Yeah, it's a great option. Now, I always think about Jack Bogle. This, unfortunately passed away, but founder of the Vanguard Group. I think he did more for the average retail investor than anybody, creating a very low-cost index or index funds with very, very low expense ratios for investors to dollar cost average into. His book is very good too if you want to read it. It's called The Little Book of Common Sense Investing. It's fantastic. It's all about how if you really want to be successful investing, it's technically not so much, now in a general sense, right, what you're invested in. It's how can you reduce the fees that you pay to Wall Street. And we've talked about this a lot on the stream. You know, back in the day, a lot of these mutual funds, they used to hit you with a 5%, front load fee. If you wanted to sell, that was another 5% back end load fee. And then they would charge you 200 basis points a year just to manage your money, right? That's a ridiculous amount of fees. And just like how compound interest is the greatest thing that ever happened in human history, it works both ways. You can compound out your gains and you can compound out your losses too with all those crazy fees. All right, so we're gonna head back down to 33rd Street and we will call it a night. Yeah, Michael Joseph is like, compound debt is no joke. DJ Review in Under 2, what's up? Has the big Christmas tree been taken down yet? I don't think so. We were just there yesterday and it was up. Hey, the guy who knocks over the garbage cans moved uptown today. There's a guy every night that goes and knocks over every trash can. Hey Sam, what's up? Good to see you. No way. Will M says we used to have this guy that used to come and move all the traffic cones around at night. Hey Alex, this is the Grand Hyatt Hotel next to Grand Central Station is going to be demolished to make way for 175 Park Avenue, a 1,575 foot skyscraper. That's going to be amazing to stream that being built over the years. That's going to be awesome. Maybe we'll have to make a video of the demolition too. It's going to be crazy to see the change in the New York City skyline over the next 10 years. I would say I'm most excited about the JP Morgan Chase building, Jamie Dimon's new office on Park Avenue. That's going to be amazing when it's built. You know, I'm also excited about the brand new Waldorf Astoria Tower that's going up in Miami. That's going to be really, really awesome. It's going to be the tallest residential apartment tower south of New York City. It's going to be amazing. Billy Johnson, what's up? Brick Stone Walls. Tom, another good book by John Bogle is titled Bogle on Mutual Funds, that came out in 1994. Hey, a year before I was born. I'm gonna have to check it out. Now, I think a lot of those type of books technically may be outdated because there's really no mutual funds anymore that you could buy with those crazy fees. I mean, if you're an investor now and you're paying 5% load fees for mutual funds, you're just getting scammed. I think that's fair to say, right? I mean, who in their right mind, with everything that's out now, would choose to buy a mutual fund today with 5% load fees and 2% management fees? Contrarian, please don't make those comments on the stream or we're gonna have to ban you, dude. Seriously. That's really inappropriate for here. I actually think I may ban you tonight. That's just, can't have that here, dude. All right, team, we are almost back to the office. I want to thank everybody for coming out tonight. If you enjoyed the live stream, feel free to subscribe to the channel, hit the like button. We'll be back on talking about the financial markets tomorrow at 8:30. Thank you so much for joining us tonight on Walks from Wall Street. I'm wishing you guys a fantastic Friday. We have now successfully completed a full week of 2023. Hopefully your week was as fantastic as mine. So Alexander M, thank you so much. Zach Drew, Evan Weeks, I appreciate you. The Investigators, Zozo Bob, LL, Richard Vogel, Paul Meddes, Joan K, Sunshine After Rain, Truth Teller, Twitch ASMR, Mike C, Vivian, thank you. Joe Driver, Meld, Billy, Bree Grams, Pineapple Water, DM, thank you. Western Mass Dave, Yogi, 4G Forever, thank you. Cuna, Susanna Q4, Diana F, Kevin Ramsey, Marcelo Gill, Bagels and Walks, Pup, DWG, Joseph Hardaway, Tom G, thank you, Tom. Sally, Carol, FredX, Law, Evan Weeks, British Gray. And to the Mighty Bull, have a good night wherever you are, because there is always a bull market somewhere and you just need to know where to look. LL, Steph UH, Dusty Cole. I'll see you guys tomorrow.